Masterminds YouTube channel. Today we will discuss about Infosys. We have seen that Infosys prices has fallen sharply today. We will discuss why it has fallen and what is the outlook beyond, and what is the factor that has bothered the analyst community. Let's discuss the result first. We have seen that Infosys has declared its results on Wednesday post market. Post that, its ADR has fallen by 6%. We have seen that our market has been closed due to some holidays, and today after holidays our market opened and Infosys shares fell by nearly 9% intraday. So that has been the biggest fall since 2020, March 2020. So what has triggered this? So actually Infosys has shown a growth of 1.2% in constant currency in its results. And the margin has fallen to 21.5%. That was quite a steep cut due to supply side pressure. We have seen the attrition jumping to 27.7%, around 27.7%. That has been a jump of 2.20% since last quarter. But if we see that from last year in March 2021, the attrition was at that time 10.9%. So the jump in attrition has been very sharp. Due to that, the margin has impacted, and obviously the profitability has hit. Although the Infosys has generated a EBIT margin of 23.3% for the full year, that has been in the guided range of 22 to 24%. And if we take the full year Infosys results, so for FY22, the revenue growth has been around 21%, and the EBIT growth has been around 14%, and the PAT growth has been around 14%. So basically this was the result. Obviously this quarter result has been below par as per the analyst expectations. So that has bothered the market. We have seen that post the results, analyst community has cut the EPS guidance for FY23. So the EPS cut has been in the range of 2 to 7% by various brokerages, and obviously they see the margin coming lower in FY23. Although if you take the management guidance over that, they have guided for 21 to 23% of EBIT margin guidance in FY23, and they have given the growth guidance of 13 to 15%. So basically what has happened is the attrition jump has been spooking the analyst community, that is bothering almost all IT companies. The supply side issues has been quite tight, so there has been no relief on that. So if you take the management view on that, they have said that the situation is quite fragile, and they have given the EBIT guidance for FY23 factoring all these factors, all these headwinds, increasing travel cost, subcontracting cost, and all sort of things are built in that margin. So they have said that the demand environment has been robust, and there has been no pressure on demand due to geopolitical tensions, and they due to the strong demand, they have given a guidance of adding 50,000 more employee headcounts in FY23. So after today's correction of nearly 7%, Infosys, as we all know, has closed around 1622 after this fall. So post that, if that has been TTM valuation of 31x on P level, and obviously that is also a premium from last 3 years median valuation of 26x. And if you take the TCS has also given its results. So if you take the discount valuation gap or valuation discount between these two players, so that has narrowed in the past, and now that gap has somewhat widened to 9%, and we have seen in 2012 that that gap has extended to 21%. So there is some room for further correction in the prices, because the margin picture is not very encouraging for FY23. So if we take all these things, this is the precise reason that market has reacted this, and obviously the cut has been quite sharp from intraday perspective. So for that, this is our analysis for Infosys. If we take that ROE into the consideration, we can see that Infosys ROE is on 29% and TCS ROE is around 43%. So there is some quality gap into that. Obviously the order book has been quite healthy for Infosys also, and we have seen that TCS order book has been very strong as compared to Infosys. So there might be some rotation into TCS from Infosys for better in earning visibility kind of thing. So that is all from our side. This is the overall analysis of the Infosys result and why the market has reacted so badly on Infosys result. Thank you. This is our analysis for Infosys. If we take that ROE into the consideration, we can see that Infosys ROE is on 29% and TCS ROE is around 43%. So there is some quality gap into that. Obviously the order book has been quite healthy for Infosys also, and we have seen that TCS order book has been very strong as compared to Infosys. So there might be some rotation into TCS from Infosys for better in earning visibility kind of thing. So that is all from our side. This is the overall analysis of the Infosys result and why the market has reacted so badly on Infosys result. Thank you.